Hello, guys. So, for this week, first, I would like to start off with a mistake I have made last week regarding a short I have, no, yesterday, sorry, for regarding a short I have made. So, this was, let me change this stupid. Okay, so it was here a triangle, and then the price has broken the upper band, going bullish. Then I said that it's based on the trend line here. If it was broken, it's going to be bearish. But I wasn't in the mood that day. I forgot that it's the weekend, and the price is mostly going to go sideways like this. Okay. Um, by the way, let me give you a lesson here, and this is the importance of subscribing and following a channel like this. Okay, when the price is, we see here three moving averages. The green one is the most important for me, is the 200 period, and this is the hourly chart. So here in the hourly chart, if the 200 moving average is not aligned with the trend line, not necessarily overlapping, but if it's dancing around it, so the break of the line mostly is not going to be very strong reversal. It's going to be either sideways or a fake break. Okay, so so keep this in mind. Okay, this is one of my secrets that I'm giving you now for free. Okay, and so this is for the regarding the last short I made. Let's have a look at the general theme. Okay, so the general theme here is, as I told you before, there was something that seems to me falling triangle, and we are waiting for the price to dance between these two lines. Okay, before it make a massive move, either by breaking the upper band or the lower band here. So we are waiting to see what's going to happen later. I can give you a certain direction because the price, as you can see, between the moving averages, and it's going to be uh, mostly it's going to go upwards a little bit before it breaks to the lower side. Okay. So according to Elliott wave theory, A, B, C, D. Okay, so this might be the D movement before we see it going down. Possibly that the price may break the higher band and go upwards by applying what I have just said before. This is the 200 green line here. You can see that it's very much overlapping with the trend line between these two dots, points. So if the price make it through here, mostly it's not going to be a false breakout. It's going to be a confirmation for the reversal to the upside. So let's have a look at the euro dollar. By the way, we can see here that the price is dancing between two parallel lines for more than a year now, 1.6 months maybe. And I love this shape, by the way. You might have heard a lot about the trend is your friend until the end, but for the um, if you are a day trader or a scalper, this will be perfect for you because you're buying here, selling here, buying here, selling here, selling here, buying here, and so on. Even if you have committed a mistake or something and sold in the wrong time, like here, for instance, going to go higher, then going to drop back again. And this is the daily chart, by the way. So it's moving slowly, but you have a big wide range to that will help you to make money. Okay, so the price from here to there, for instance, this is 1,500 to 1,780. This is 200 and something pips within almost a month. So not bad if you are a swing trader. As you can see here, it's a very strong support level. The price is pinning upwards and moving in what it seems like a correction for this bearish trend. I believe it's a correction. If the price has broken this line, bearing in mind that the price is under the 3 moving average, I believe it's the time to go parabolic bearish. It happened before here. As you can see here, the price has made the same shape, but the price rejected being bearish and went upwards. So it could be the same as here, or if we saw a big candle downwards, it will be an enough sign for me to sell, and I still believe that it's going to be 61.8 retracement level. Okay, so what else? I believe I told you about the pound dollar chance. As you can see here, it's a great opportunity to grab. This is the daily chart for the pound dollar, and as you can see, it has formed a very clear rising wedge. Once it break it, it's going to go also parabolic bearish as the euro dollar. So I don't believe that it's going to. I told you that last week, and that what had happened already, that the price mostly is going to rise. Okay, especially that the moving averages are in the middle of the rising wedge. So this is most of the time. Mostly is going to go have a leg, one more pump to upside before it goes down. Kindly, guys, if you can share this channel with someone that you admire or respect, I will appreciate it, because the channel has a very humble number of subscribers. So if you, I'm helping here my friends for free. If you can help me, this will be great also. Let's have a look at the Kiwi, because the Kiwi is interestingly has been the Aussie Kiwi and the Kiwi pairs in general has been very has had like a very long-term bullishness, and the price seems to me on the daily chart that it has just started to break it. He's the same idea. The two moving averages have been broken, but the trend line, as you can, and the trend line here has been broken barely, but the 200 moving average is still far away from the trend line somehow. So mostly this is going to be something like this, something like mountains here before it drops. I don't believe that this is going to be a strong bearish reversal. Let me check on the weekly. Probably I see something different. Okay, if it dropped here a little bit more, it's going to be double top. Okay, and once it breaks the trend line, I believe it's going to go somehow in a moderate speed, sorry, to the to meet the red line. Okay, but either way, for me at least, this is not a right time to continue buying, despite there is a reversal, despite the fact that we have here a reversal hammer here. That's it. Let's have a look at the Kiwi dollar. We see a reversal candle also the same here. yet this okay, I like the Kiwi dollar also chart because it's moving in sideways, but big move. So we have average moderate volatility where it's not moving in one direction, and at the same time you can make money, still can make money. This is for the, let me check on other Kiwi pairs. Let me check on the Kiwi CAD. Same exactly. Let me check on the US dollar CAD. Same as the Aussie Kiwi, same shape. Okay, and it seems like they are copying this each other, because if you remember, if you recall, the, the Aussie Kiwi had also this expanding diagonal, then the price went upwards. So I believe there's some kind of correlation between the two pairs, or high additive correlation. Um, for the gold, okay, I said before, me- here we go. So this is a bearish channel. It's going to be up and down until it touches the upper band of the channel and goes parabolic again. I believe it's going to be choppy, by the way, and you have, if you have noticed, these are the three moving averages. The price is under each and every moving average. So I'm not expecting a lot. Sorry. I'm not expecting a lot from the gold. If you would like to take short-term scalps, that will be fantastic. That's it for today. I don't want it to make it longer. If you are new here, subscribe because you are going to learn a lot. Thank you very much.